What were the most insightful exposts this week on Twitter? We are live from Tokyo to review the best insight that we have seen on X. So we are going to review the most insightful tweet this week. I'm Eddie for Tokyo Alpha Mind, and today we are going to deep dive into companies like Google, Alibaba, for example, and all the SaaS names to see like how AI is going to change the investing landscape. So the first tweet today that we are going to review together is the tweet from Citron Research, which actually published the fact that they were short Palantir. So the tweet actually is comparing Palantir and Databricks, and what they mention is that all road leads to $40, this time Databricks. So basically Citron is comparing Palantir and Databricks and just mentioning the fact that because Palantir and Databricks have very similar business model and very similar business altogether, they should be valued at the same multiples and at the same valuation. So basically what Citron Research is saying here is that because Databricks is now valued at $100 billion, so Palantir, which has very similar sales and growth, for example, should also be valued at $100 billion. So what they say is that congratulations to Databricks, one of America's truly great growth company, now valued at $100 billion in the private market. No other company resembles Palantir more closely in product offering and enterprise ambitions. With over 15,000 clients, Databricks has become the go-to platform for analyzing data, and the new partnership with Palantir directly ties the two companies' future together at the enterprise level. So here's the problem for Palantir bulls. Most would agree Databricks is a stronger business today. Unlike Palantir, it isn't reliant on government contracts. It's a true SaaS model and it's growing faster. Well, so here I think that we have to dig a little bit deeper into that. I think Palantir and Databricks, in the same way Palantir and Snowflake, are slightly different. So Palantir is actually different from Snowflake and Databricks because first, Snowflake and Databricks, they are very similar. I think that if you want to have a pure comparison of Databricks, Snowflake is the most similar business to Databricks. Having said that, so the difference between Snowflake, Databricks, and Palantir is that Palantir is taking a very different approach, meaning that they are taking an approach where they are going to companies and they are building a holistic solutions for these companies to really analyze data and implement AI. While Snowflake and Databricks on the other side have a slightly different approach, meaning that what they are doing is that they are providing the tools and the platform for the companies to build themselves on top of it. So that's where it's a bit different between Databricks and I would say Palantir. But I think that Citron Research, even though like they're a bit mistaken on that, they have a point in the fact that today Databricks, Snowflake, and Palantir have kind of very similar time because I don't think that Palantir has reached its primary goal to be like the OS for every enterprise company. To the question, is Palantir overvalued today? Absolutely yes. And should it be valued very similarly to Databricks? I think so. I think that $100 billion valuation for Palantir should be actually quite good for Palantir, I would say. And in terms of business, I don't think that Palantir has achieved more than what Databricks have done. And I think it wouldn't be unreasonable to actually think that they would have, as of today, the same type of valuation. So the second tweet today that we are going to review together is a tweet by Long Invest saying that the biggest crisis of modern civilization is the decline of independent thinking. People don't make independent decisions anymore. And I think that is very correct on this one because one of the biggest difficulty in investing is to be able to independently make your own thesis. And I think that a lot of people today are not able to do that. They're not able to critically think by themselves and they rely very heavily on other people's thinking. And that's why you have this type of herd mentality where a lot of different people, they are buying the same companies because this is what they are seeing on YouTube, this is what they are seeing on X, and they are kind of thinking together. But sometimes like they are right together. So I think that's also like a good point in a sense. But I think that more and more people, especially with AI and also outside of investing, are going to lose this faculty to be able to think independently. So that's why for you as an investor, I think this is very critical to develop this ability to critically think by yourself and making your own thesis in terms of investing. Because if you kind of blindly follow everyone's advice on X or YouTube, then you will be actually kind of slave to the herd mentality and you will never be able to outperform by yourself. The next tweet we review today is a tweet by Bucco Capital, and I think this is very important for any investors today investing in software or investing in AI. Why? Because it's a tweet actually like revisiting like the SaaS model and why like some companies are going to outgrow this crisis today with AI and why some companies are going to lose. So basically what he's saying is that I think it's really important clip, well, so basically from the All In podcast, and every software tech investor should watch it. The good first pass every investor should have in software tech right now is the CEO a killer? Are they willing to kill their old company to refund and actually build it for the new AI era? So basically what he's saying is that basically what's going to matter is are the CEO going to be able to adapt and change their business model and change the way they are working. So there is no more era where all these SaaS companies, they are kind of bloated with like too many employees. Now I think the era is the same as what Meta had, is the year of efficiency, and I would say that that's the decade of efficiency for all these SaaS companies. So the very important point in this tweet is actually mentioning that all these SaaS companies we actually grew in the ZERP era, so basically the zero interest era. They will have to adapt now that there is a new environment for all these companies, because before they had a lot of funding very easily, and now today this has changed. So there is no more like too many employees in these companies, and they will have to adapt definitely. And so basically, because like most of the tailwinds for these companies, especially with the zero interest rate era ending, and now AI actually being a threat to all these software company, like they will have to adapt, and that's what is mentioned in this tweet. And I think that this is what is going to separate the winners and the loser in the SaaS industry. So if you want to invest in those SaaS growth companies, you have to really look at the management. So on this one, this is going to be the most critical point, to look at the CEO, to look at the management team, and if they are willing to actually change the way they operate, because AI is going to force every of this company to change the way they operate. So the next tweet we are reviewing today together is the tweet from Sundar Pichai, the CEO of Google. And so what he's saying is that, well, so he's mentioning his new event made by Google, and he's saying that they are announcing the 10th generation of Pixel, and they capped off summer with shipping a lot of different products for Google. And basically what he's mentioning is that week after week, they have shipped like new models, new products, new features, and no new devices. And so this shows that Google has been shipping like all over the place new AI products. And that really confirms like one of the core theses that we have had on this channel, is that Google is going to be an AI leader, because they are going to permeate all their different products with AI capabilities. And we have seen that with the new Pixel 10. So they are going to use their Gemini products into all their products and all their devices, and they are going to basically dominate on all verticals. This is something that they are the only one being able to do that today. We are seeing that Apple is actually struggling a little bit in doing that in their ecosystem. Same thing for Microsoft. But what we are seeing today is that Google has been able to operate very efficiently at scale with their Gemini models, and they are now basically shipping these Gemini models and these Gemini capabilities and Gemini, I would say, features in all the different products. And they're going to continue because they have a lot of different projects, for example, AI assistant live actually, and AI agent that they are going to also use in their different products and different devices. So let's stay tuned on the different updates from Google, because we are seeing that today they are continuing shipping and they are continuing winning definitely. Okay, so another company who cannot stop shipping AI products is also Alibaba. So today we have two tweets basically for Alibaba. So the first one is actually very interesting because it says that Alibaba is casually turning its merchant monetization into SaaS ads product. That's a blueprint for scaling video live creator ads across AliExpress, Trendyol globally. Not sure people understand what this will do to their take rate. So basically, like, why is it's important and why it's very interesting, because it shows that Alibaba, same as Google, is going to actually embed AI into all the different products. And this is going to basically improve their existing platforms. And this is going to improve their e-commerce platforms globally, but also in China. And also very similar, we are also seeing Alibaba creating new products based on their Qwen models. So what we are seeing today is that Alibaba is launching a new agentic programming platform, especially for global users, for more and more people to use their Qwen models in an agentic ways. And so we are going to see actually Alibaba ship more and more products. And this is really going to actually supersede like the Ali Cloud platform. And we are going to be surprised definitely by the way Alibaba is going to grow thanks to their Qwen models and their whole AI platform. So I think that this is going to continue in the very same way Google is doing today. So more and more products are going to be embedded with these AI capabilities, relying on these models, which are actually very efficient. and actually allows these companies, so Google, Alibaba, to scale these features to millions and even billions of users. The next tweet I found very interesting today on Twitter is this whole drama around Duolingo. So all drama because this is a battle between bull and between bears on Duolingo. So actually Duolingo is actually stuck into this I would say crossfire between the fact that they are growing very well today, but they're also like kind of threatened, I would say, by all these new AI tools and new AI capabilities, especially from OpenAI and Google. And so today, it's also the show that we are looking at, today that the tweet that we are looking at is a tweet by Joseph Carlson, basically like reiterating his bullish thesis on Duolingo, why financial education, so basically Jeremy is actually short on this Duolingo stock. And what he's saying is that, okay, so he understood like Jeremy's argument, and basically like he's basically reiterating why he's still very long Duolingo. And I think that Duolingo is very interesting because it really reveals that there are this kind of stock that are going to be winners or losers against AI. And I think that Duolingo today, this is not very clear because, well, yeah, I think it's going to be very difficult for them to be a winner in this AI world because like a lot of companies like OpenAI and Google, they're going to productize like this type of features and they're going to offer it for free. So Duolingo as an app is going to be very difficult to basically monetize education technology. I really think that Google and OpenAI with their learning tools, yeah, well, they are going to be one of the primary tools for people to learn new languages or new things like math, chess, for example. So I think that Duolingo will have to find a way to really differentiate against all these free offerings actually, and actually encourage users to use paid features. But I think this is going to be very difficult for Duolingo, definitely. So on this one, I wouldn't be short because I think that the game has not been decided yet. I think we need to see more from Duolingo on how they are going to actually go beyond the use of basically like Google or OpenAI in terms of AI. I think that today one of the key for Duolingo to actually win is being able to engage users into their community and engage users basically to use the app more and more rather than just going into Google, Gemini or OpenAI ChatGPT. So I think that if they're really focused very deep on their core user needs, I think they can still survive and they can win. But I don't think that they're going to thrive with like billions of users, given the fact that the same offering is actually very available for a lot of users already into the ChatGPT and Gemini of the world. Okay, so you have it today. So a review of the most interesting tweet that I've seen today on X and that I wanted to review with you guys. And so basically, so have you seen, so AI is still actually quite very powerful force that are going to shape a lot of different businesses. And definitely this is something that you should take into account into your investing. If you're interested in the analysis like this one, so please check my other videos, please comment, like, and please subscribe, and I see you in another one. Bye.